All right, let's dive into a pretty bold call from one of the biggest names on Wall Street, JPMorgan. They've basically laid out a recipe, a very specific recipe, for what could be a major market rally. So, what are the ingredients?
So, first things first, what's the headline here? What's the core advice coming from JP Morgan's trading desk? The one run by Andrew Tyler. What are they telling people to do with their money right now?
And there it is, just three simple words. Buy on dips. This is the absolute central theme of their strategy right now. They're telling investors, look, any weakness in the market, any little pullback, don't see it as a reason to panic. Nope. See it as a golden opportunity to buy in. And hey, for anyone who's not totally familiar with the lingo, buying the dip is a classic move. It's really simple. The whole idea is that you're betting a price drop is just a temporary blip, right? It's not the end of the world. You're basically trying to snag an asset at a discount, convinced it's going to bounce right back. Okay, so that brings us to the most important question of all. Why? Why are they making this call right now? This isn't just some random hunch, right? It's based on some very specific signals in the economy. So let's look at the foundation they're building this whole argument on. So the foundation for this call really stands on a few key pillars. First, and this is a big one, the Federal Reserve has already cut interest rates. JP Morgan sees that as a huge green light. Plus, they're expecting at least a couple more cuts before the year's out. Then you add in some stronger than expected retail sales data, and suddenly you've got a picture of an economy that has a pretty solid floor under it. And that move from the Fed, it has a name. It's called a dovish cut. And that's a really key term to know. When a central bank is dovish, it means they're trying to help things along, stimulate growth, which, you guessed it, is usually fantastic news for the stock market. So JP Morgan's team saw that rate cut and thought, yep, that's exactly the signal we were looking for. It just confirmed their whole bullish outlook.
So, okay, we've got this supportive backdrop, right? The Fed is playing nice. But a good environment isn't always enough. You need a spark, a catalyst. And this is where JP Morgan's analysis gets super specific. They've basically created a checklist for October, a list of things that have to happen to actually trigger this rally.
Yeah, you can really think of it like a recipe with three absolutely essential ingredients. What JP Morgan is saying is that for their whole buy the dip strategy to really pay off, all three of these things have to come together this October. It's a very specific and very time-sensitive catalyst. So what's in the recipe? What are these three crucial ingredients? Number one, employment data has to bounce back after a couple of weak months. That's a must. Number two, inflation needs to stay, and I'm quoting here, manageable. So no sudden scary price spikes. And number three, third quarter corporate earnings have got to be strong. It's like a three-legged stool, right? All three need to hold up or the whole thing wobbles.
And look, this isn't some vague forecast about the future. No, this is all anchored to specific dates you can circle on your calendar. You've got October 3rd, that's for the huge jobs report. Then on October 15th, we get the inflation numbers. And then the action really starts to heat up in late October when Q3 earnings season kicks into high gear. This is the timeline to watch, for sure. All right, so this is the crucial part. What happens if it all works? What if every single one of those boxes gets checked in October? What's the potential payoff here? Let's talk about the prize that JP Morgan thinks is waiting at the end of this checklist. If that jobs report is good, if inflation stays calm, and if company earnings are strong, JP Morgan uses this very specific phrase, a breakthrough rally. And they don't just see this as a one-off event, they see it as the crucial first step, the launch pad for even bigger gains heading into the end of the year. And here it is, the big number, the potential target if that breakthrough rally actually happens. They believe the S&P 500 could rocket past 7,000 by the end of the year. I mean, that really shows you the scale of their conviction here. We're not talking about a small bump. They're forecasting a significant, brand new high for the market. And that brings us right to our final thought here. JP Morgan has laid out the entire recipe for us, right? The ingredients, the instructions, the dates, it's all there. But the million-dollar question remains, will the economy actually deliver? Are we going to see the jobs, the inflation, and the earnings all line up perfectly to cook up this breakthrough rally? Well, I guess we're all going to find out this October.